Real estate professionals were banking on this spring to reverse years of a sluggish, frozen market. Falling rates briefly created a window of hope, and for a moment, the stars finally seemed to be aligning for buyers. But that momentum just hit a wall. According to the Mortgage Bankers Association, their measure of loan application volume, the Market Composite Index, plummeted 10.9% in a single week. The damage is even worse for homeowners looking to lower payments. The refinance index fell an even steeper 19%. A long-awaited recovery was killed in a matter of days. An unseen force has the power to suddenly freeze the entire American housing market. Interest rates didn't need to jump by whole percentage points to cause this freeze. In fact, the actual shift was surprisingly small. Average rates for 30-year fixed loans ticked up from 6.19% to 6.30%. That's roughly a 20 basis point increase, the highest rate since December. Yet that tiny shift caused conventional refinance applications to immediately crash by 27%. Government-backed loans saw a slight divergence. Refinances through the Federal Housing Administration, or FHA, only declined 5% because their rates didn't climb as rapidly. The American consumer is operating on such a razor-thin margin of affordability that a 20 basis point fluctuation acts as an economic wrecking ball. MBA economist Joel Kahn identified the source of that sudden jump. It stems from the uncertainty generated by the conflict in the Middle East, specifically the war in Iran. Military conflict overseas injects massive volatility into global supply chains. That volatility has left global oil prices severely elevated. Expensive oil creates the risk of a broader inflationary shock in the U.S. economy, which forces domestic interest rates higher to compensate. Geopolitical conflict spikes oil. Oil threatens domestic inflation, and inflation forces mortgage rates up, instantly killing local housing momentum. The average American neighborhood is now directly tethered to these volatile global shifts. Windermere principal economist Jeff Tucker has been tracking this disruption. He notes that the momentum from just weeks ago has vanished, and the stars for buyers are no longer aligned. He does suggest the impact could be limited, simply because we're still early in the spring home buying season. But that hope depends entirely on how quickly the Iran conflict gets resolved. Knowing when to lock in a mortgage now requires monitoring the world stage. The American cul-de-sac has become captive to international geopolitics.